At GoldSilver.com, we have a price match guarantee, free shipping, and global storage options. Find out more and make us your bullion dealer at GoldSilver.com.
Hi, everyone. This is Mike Maloney, and I have Ronnie Stoeferle on the line with me here, and he's from Incrementum AG. So if you've been following this series, Incrementum produces the In Gold We Trust report, which is one of the most comprehensive reports that you're going to see on the precious metals market and the state of the global economy. And he's been doing this for quite a number of years now. Ronnie, it's great having you here with me. How are you doing?
Very well, Mike. How are you?
Good. I think we'll just jump right into it because, people have been following this. So we'll skip any small talk here and go right to page 35, where you have gold ETF holdings. So ETF stands for Exchange Traded Funds. So this is gold that isn't necessarily real gold. You have to look at the 10K filings and the things that they file with the Securities and Exchange Commission. These are funds that represent gold. Some of the funds are redeemable in real gold. But what I've noticed is the largest fund of all, if you read the actual description of the fund, lawyers created all of this. They've got armies of the most expensive, best attorneys in the world creating these things. And it's like every sentence, if you really analyze that sentence, you just have to sit down and think about what are they saying? And you have to think about every sentence for 10 minutes. How could they be lying to me is what you've got to say. And what you end up with is you find out that each sentence either says the exact opposite of what it's supposed to mean, or it means two things, or it means absolutely nothing. But what I find interesting about this chart is this is another chart that shows you that gold is cheap. You look at the beginning of the chart. Now, the shaded background areas are the holdings of North America, Europe, Asia, and the rest of the world. And then the gold line is the price of gold. And you've got, I believe, the right-hand scale is the price of gold, and the left-hand scale must be tons of gold. Am I correct?
Yes.
Okay. And so what you see here is there was a tremendous gap at the beginning of the chart, and then the holdings in this chart sort of catch up with the price of gold in the middle. But right now, mostly because of European buyers, not as much the United States, the gold holdings are exceeding the price of gold. And what's amazing is with all this demand, why is the gold price still not setting record highs? I don't understand. But what I do see here is that the lighter blue area is the area that has expanded most since 2015 or so. Since the peak in 2012 all the way to 2015, the blue air, the spread between the dark blue and the light blue is a certain quantity, and then it starts to grow. And right now, European holders of gold, it's almost the same as the North American holders of gold. So what's your story on this chart?
Well, I think it's no coincidence that Europeans are buying, because over here, we've got zero interest rates or even negative rates, while in the US, we're just on the way down. So actually, back in the days, I remember I heard the same old stories all the time. You cannot eat gold, and gold doesn't pay any interest. And now you have to say, compared to most bonds and rates, actually gold is a high yielding asset with with having no yield, basically. So
10% per year, global average of 10% per year. It's a very high yielding asset for this.
Absolutely.
But there is more than stocks, more than bonds. So yes, you're correct. So you think that's the reason Europeans are starting to rush toward gold?
I think, Mike, we travel quite a lot, my partner Mark and I, and we meet clients from all over the world. We talk to institutional investors, we talk to central bankers, we talk to retail investors, we talk to Uber drivers, to bartenders, whatever. And we realize that when it comes to gold, there are actually three different worldviews. I think this is important because from my point of view, the investment demand will tip the balance on the gold scales. So the three groups are the believers. they think that, this crisis is managed very well, and, central bankers did the right thing, and the patient is on the road to recovery. So for them, they don't need any gold. But then there's the second group.
Everything is going to take them by surprise.
Exactly. They believe in the tooth fairy still and in Santa Claus. Then there are the skeptics. Those are people, and I think we are seeing them quite often in the financial markets already. But those are the people that would only tell you that they are buying gold, after 2 or 3 beers, and they would never admit that they're a bit concerned. But those people have initial doubts about the recovery, and they have in the last couple of years kind of regained trust in the status quo. So they don't question central bank policy too much anymore, but they're a bit concerned. And the third group, those are the critics. Those are the people that see a systemic error in the structure of our monetary system. For them, it's clear to have gold as a hedge and an insurance policy. And the interesting thing is, it is a one-way street. Once you understood the system and how money is created and how dangerous this extreme monetary policy is, you will never go back and become a believer and say, what the central banks are doing, that's fantastic. We need more QE. It is a one-way street. And from the group of skeptics to the critics, I think this will really be lots of gold demand that will kick in. And I think the ETF demand is, let's say, representative for institutional players, for demand from the financial markets and from the financial industry. So the sign that we are hitting new all-time highs clearly shows that gold is on the way to becoming a core asset again. We're still very early stage, but from my point of view, gold will become a core asset for generalists again.
Yeah, you said that it's a one-way street, the way that you see things. Once you understand the monetary system, you know that there's something wrong. I have a different way of phrasing that. Once you see it, you can't unsee it.
Yeah.
It's with you forever.
Yes.
The next chart I want to go to, I want to skip down to page 38. This is gold in nominal and real terms. Gold is real and everything else is fake. So what we've got here is an inflation-adjusted price for gold using today's dollars and going backwards. And what we see is that, so this is using the consumer price index. Am I correct?
Yes. So we could question the numbers. They should be probably higher.
So it's using the CPI, I call it. I say it's the CPI is the consumer price index. It's the CPI. Now, John Williams of Shadow Government Statistics, shadowstats.com, he's reconstructed the pre-Ronald Reagan CPI. Now, I don't believe that one is correct either. I believe that the truth lies somewhere in the middle. But it would put this high, 1980 high of $2,215, somewhere up near $5,000, I think, if you split the difference between John Williams, Shadow Stats, and the CPI. And that was, I think we're in for a greater crisis and greater panic than the last time around. And another thing that I just noticed looking in this chart, again, I think you've got monthly data here. If you look at the gold line in the chart, the non-inflation adjusted line, the two peaks are equal. And if you have a daily, you'll see that first peak is significantly higher than the second peak. So I would imagine that the actual high that you have at 2215 here is probably more like 23.8, closer to 2400 adjusted for that. So, a monthly is a good average because it's very difficult for somebody to sell at the exact top. Anybody that does was just simply lucky. It just shows you how incredibly people think gold is setting all-time highs or set its all-time highs in US dollars in 2011, and it didn't. It didn't come close, right?
Yes, and my long-term target when I was still with the bank, when I started my first In Gold We Trust report in 2006, back then I said my long-term target is 2,300 US dollars, and back then gold was trading at roughly $500, and everybody said that's crazy, and I said, this is basically the inflation adjusted all-time high. And normally, within the course of a bull market, the inflation adjusted all-time high gets taken out. So
Yes.
it is important to say that, inflation adjusted gold is still dirt cheap.
Yeah, I first started down the road toward gold back in 2001. My best friend told me to investigate gold because in 2001 the markets had crashed. The world economy seemed strange, and that's when I started studying it. I started buying in 2002 with the spot price of gold was about $315 an ounce. And then I discovered silver in April of 2003, and I believe it was $4.30 at that time. And I discovered how undervalued silver was compared to gold, and I started buying silver instead. But I started buying both. I started telling everybody, you got to buy gold. Gold is 315, 330, 350, 400. I'm going, you got to buy gold. You got to buy gold. And they go, you're crazy. That's the worst investment you could make. It's been going down for 20 years. And I go, exactly. It's been going down for 20 years. Don't you get it? And they don't get it. They just did not get it. None of those people. Well, actually, there was one of them that I did convince, and man, was she grateful, because she was able to buy gold under $400 and still has that gold today. Back then, when you started in 2006, I incorporated GoldSilver.com in 2005, and 2006 is when Robert Kiyosaki started putting me on stage in front of the big audiences. That was the year that we did. I think there was the 30,000 people in Los Angeles, but then Atlanta had 10,000, Chicago had 10,000, New York had 20,000, and Boston had 15,000. So I spoke to a lot of people live in 2006. So yeah, it's interesting that our careers started, close to the same time. And so I want to tell everybody to look down in the video description and click the link to Ronnie's website. Go to Incrementum. You can download this report. Make sure you subscribe to our channel and click that little notification bell so that you get a notification of the next video in this series when it comes out. Ronnie, thanks so much for being here.
Thank you, Mike. It's a pleasure.
Okay. I thank everybody else for listening and for watching this video. Thanks a lot. We'll see you next time.
GoldSilver.com. Price match guarantee. Free shipping. Global storage options. Phenomenal customer service. Get the best-selling book, Guide to Investing in Gold and Silver, for free at GoldSilver.com.